A friend of mine had a child recently, and like any other parent, he is hoping for the best for his child in the future. So he's starting to plan already in how he can best take advantage of the current inheritance and gift tax laws as they exist now to try and best set up his child so they get the best start off in life. So, with that in mind, I thought it would be useful to put up a video about bare trusts, which is something I was talking to him about, and it is a good way of trying to secure your children's financial future, give them a good kickstart in life. So I'm going to explain exactly how they work and how they interplay with the different tax rules that we have in existence right now. A bare trust is a legal arrangement in which you transfer the ownership of an asset to your child, typically cash, investments, or property, but the children obviously will have no control over how the assets are managed. A trustee will manage these assets for the benefit of the children until they reach the age of 18, which they can then access them. There are potentially a lot of tax benefits to using a structure like a bare trust. Firstly, you get to utilize the small gift exemption, which allows anybody to give somebody €3,000 a year, and the recipient of that gift does not have to pay any gift tax or capital acquisition tax on that gift whatsoever. Another tax benefit of these bare trusts is it allows you to avoid eating into the lifetime capital acquisition threshold in terms of how much you can gift to your child over your lifetime and them not have to pay any inheritance or gift or capital acquisition tax on that gift. On top of that, as well, the Bear Trust allows you to take advantage of the tax rules as they exist now and not hoping that they will still be beneficial in, say, 20 years' time. So, now if we talk a little bit further on the small gift exemption, so each parent can potentially give their child up to €3,000 per year tax free. So, a €6,000 gift between both parents can be given to the child completely tax free each year without eating into the lifetime limit of the gifts that you can give to your child. So over a span of 18 years, that can add up to a substantial amount of €108,000. So if you're planning to give quite a large inheritance to your child, this could be a way that you could plan it out to try and build it up in the most tax efficient way possible by building it up €6,000 per year and increasing the tax-free amount that you can give to your child over your lifetime. I know personally one of my friends was thinking about using the child benefit of €140 that they receive every month and putting this to the side for the benefit of their children. So when they reach the age of 18, they'll have an amount there that they can use to fund their education or maybe even a deposit for a house. It gives them a bit of a kickstart in life. So even €140 a month over 18 years, if you can afford to go without it, that will add up to €30,000 without taking into account any increases in the child benefit that may come, as well as not taking into account any investment growth as well. So that's quite a substantial amount of money to be giving to your child. And as I was saying, you currently have a lifetime limit in terms of the gifts that you can give to your child of up to €335,000. This is outside of the small gift exemptions which you can give every year. So that could potentially change in the future. We are looking at potentially seeing some changes in the government and parties that will be in control in Ireland in the future. You never know, they might have a completely different way of taxing the wealth in Ireland, and potentially these limits could be reduced. So if you were a bit pessimistic about these thresholds in the future, you could take advantage of them now by using something like a bare trust. And as always, when you use something like a bare trust, you need to think of your own personal tax implications as well. In terms of capital gains tax, if you were to transfer, say, an investment property into a bare trust, you will obviously need to pay capital gains tax on any gains that you have made between the time you bought the property to the time that you actually transfer it into the trust. So that needs to be taken into account, which could be quite costly. And for that reason, maybe it's not advisable to put a property into a trust like that. Also, in terms of income taxes as well, because the child obviously is not going to be paying the income taxes on that property as it generates rental income over, say, the 18 years, for example. So you will still be liable for that income tax. Therefore, in these circumstances, it may be preferable to invest in non-income producing capital growth assets instead into the trust. It may be more preferable, but the option is still there. And with everything, there is obviously downsides. And the biggest downside, which can turn off a lot of people from ever using a bare trust, is that You or the beneficiary will not have access to the funds until the child turns 18 years of age. So if you need access to those funds in the short term, then a bare trust just may not be for you at all. It really is only for people who are intending on leaving that money in there until the child turns 18 and having no recourse basically to get it back. In terms of different providers in Ireland, I know there's the likes of Standard Life and I think Aviva also provide bare trusts. There is definitely a couple of different providers out there if you wanted to do a bit more research and talk to somebody about it. They could be a useful option for you if you want to increase the amount that you can potentially give to your child tax free.